Pre-market session trading, is it good or is it very dangerous? I give you a little explanation about it because I have done a trade like this in this morning in DAX Future and I earned a lot of money. It was easy money, but you have to be a lot of exercise in the back that you will be able to have a comfortable trade and not a gambling trade in the morning. And if this is interesting for you, watch this video. I give you a deep explanation and I explain everything very, very good. I hope you enjoy this video. I translated with AI because it's easier for you, because I'm not a native English speaker, but I think you will love it. Have a good time.
So this morning we're starting with a live trade in the DAX future, and yes, what's going on here? In any case, we're going to take a look and get an overview of what happened here in the pre-market. I want to show you which trades make sense in the pre-market, and for that I want to introduce you to the following structure. Why am I already going short in the DAX future before the market opens? And that's simply because we've just reached a really great area here, and I was already a bit too early this morning, took a stop loss as well. That's just part of it, no problem at all. But what's the situation now? And I think it's a very, very good trading idea. We can now definitely see and construct for ourselves here that the market has already reached its targets in the 480 to 491 area. There was also an immediate, quite aggressive reaction to the significant downside there. I can also clearly see here that we had a truly beautiful setup to ultimately fish the entire market out right at that precise spot, which was a very important moment. Now it continues, and we'll see how the market deals with this structure here. For this trade, I'd like to present the following to you, because I think it's going to be very, very exciting. Specifically, if we look at this live now, what's going on here, I immediately see that we have a beautiful P setup here. We broke out of this setup to the upside, moved into the resistance area, and simply didn't have any more liquidity up here. Now we're moving right back into exactly this price area, and I can say that the probability of us retracing this entire move down here is simply high, because there was absolutely no base here, plus there's a very nice resistance zone here. And whenever there's a corresponding reaction at such a resistance zone, it's naturally an idea for me to immediately enter a trade there. I also like to do this pre-market, because I just know that with high probability, profits will be taken here first, and everything else the market will show us now, whether it does so or not. So what's also interesting to see here is that we have today's VPOC, that is the point of control, the area where the market has traded the highest volume. There simply wasn't any more liquidity above, which you can see perfectly here. Up here, it just stopped. No one was interested anymore. That's why I assume we'll move down a bit for now and just sweep the market again down here, where the last liquidity started. And that's all the ideas I have at the moment. And it's the same with the gold futures. I'm running a trade there where I see a similar picture, but I also notice that there's simply no liquidity left at the top. However, the risk there is much higher, since the market is currently being driven so strongly long by various stories, so you really need to be cautious. That's why there's less risk involved there. And now we will carefully observe and analyze what kind of substantial profit the overall market will ultimately provide us with when we meticulously examine the broader, more comprehensive picture of the current financial landscape. As I said, you can clearly see here that we're above last week's value, we're above the block, but up here we still had lower highs for now. That means the probability that the market will first return to equilibrium here is simply there. And as long as that's the case, we let the trade run and simply wait to see, just as you can see beautifully here, and also here on the right in the footprint chart, the liquidity was no longer pushed further upward, so the rest is up to the market. We watch just as we have to, because we have absolutely no influence over what the market ultimately does. It does what it does, and all we have is a risk-reward ratio that we can consider for ourselves. I let the trade run, and then we'll see how things develop as it goes along. As we can see, that's just trading. There's nothing you can do except wait. In the end, I assume that the liquidity will be pulled back down, but trying to intervene in any way right now is absolutely suboptimal. The only thing I would possibly do if I see that the market starts to push liquidity below the report is to add another position and then move the stop loss up here above the last major trades accordingly. But taking on too much risk at this time of day isn't really that effective, in my opinion. So we'll wait to see what the market shows us and just observe what's going on. Maybe another interesting story for you. I don't know if you'll find it interesting, but I always look at it. I always check the UX sentiment. And what does that show me? It shows me that currently a huge number of people are long, and yes, the small derivatives traders. I also look at which stocks in the index are currently strong and which are weak. I see that Rheinmetall is very weak. I see that Conti is very strong. It's all relatively balanced. What also stands out to me is that Bitcoin isn't as strong as it often is when these kinds of stories are circulating in the market. So I get a global overview of all these things, what's going on, and that helps me a lot to give my position more confidence. And yes, I can really localize this confidence for myself right now. So I'm keeping calm and just letting the market decide what it wants to decide. There's nothing more I can do. As we can see, we're back to break even here. I still don't see any liquidity, so I'm going to add another position here because the risk is extremely small for me right now. And yes, that's very effective because it increases my risk-reward ratio many times over. That means the upper resistance seems to be holding, and now it's time for the big players to just push through because up here there's simply no more liquidity. Otherwise, we'll lose the trade. We'll see that in a moment. I'm going to quickly grab a cup of coffee while the market does its thing. As we can see, gold is basically stagnating, almost asleep up there. Liquidity was present at the top, but it was really thin, and I can imagine that a few market participants are simply pulling out some liquidity. What I quite like is that up here I see the Nasdaq correcting as well, which, by the way, was also at an interesting level. Now we'll see whether this is reflected in the European index futures or if the market right at the opening, and that can certainly happen, first throws out some poorly positioned stocks via stop loss. What we can see now is that the closer we get to the cash open, where, by the way, I also want to reduce risk, the more positions are being sold, especially here in the gold futures. That simply has to do with the fact that people know the cards are being reshuffled and you have to be vigilant accordingly. You can always read that very clearly. What you can also see here now under the VPOC, at the VPOC, is that no one is interested anymore. So the liquidity that the guys took out at the top isn't finding any follow-up buyers here at the moment. Gold is a bit different, as I can see. So there are still buyers active there. Someone probably has to buy. Is probably in a difficult position, but well, that's just how it is. If you always knew everything in advance, that would be fantastic. So as before, you can see it beautifully here. Nasdaq future pre-market, the liquidity, let me just scroll down, is simply down here, and that's also the case in the DAX. Markets always want to go where supply and demand are being traded well, and we have to adapt to that and wait patiently. Now it's really starting to look good to me. I also want to explain this to you so that you have a bit more context. Let me quickly take a screenshot here of the DAX future for that. So we have the following structure. Here, a nice P without any real substance. So Then there was a significant breakout here, and the protective stops were unfortunately placed in a particularly unfavorable area, but that's perfectly okay. We carefully scaled back into the market at this precise point, and now we are fully accepting the established market structure once again. That means the probability that the market will once again favor deeper supply and demand zones is simply present now. And if it drops down here and briefly accepts supply and demand, I assume we'll go to the start of the corresponding impulse, because there's simply nothing here that could stop the market, since there was no liquidity present here. So my confidence is now increasing more and more that this whole thing will soon come to a nice end for the bulls in the short term, because I simply see that there are no more buyers here. That means liquidity is really exhausted now in the pre-market. And the logical conclusion is simply that the market will react. So I've now drawn the range for you that I just mentioned, where it's now very nicely and clearly visible that the market is starting to pick up speed below it. That's great for us. That's obviously great for the trade. And in the end, this can only go well now. Now, of course, what's exciting is what happens here below this liquidity at 57, right where we are now, and below that we just need to see a bit of momentum so that our trade ends well for us, and then everything's fine. So I've now closed a small position here because I simply saw that the market wasn't showing any more action there for the time being. Why do I do that? Because I simply assume that it's going to try to test the liquidity at the top again, and now I just can't lose any more money with this trade. That's what's important to me for now, and I think this was a very good area to take a small position off the table for the time being. The risk at the open is of course high that the market will make a quick sharp move, and then you'll be really annoyed if you end up running the entire position into the red. So far, we also haven't had a closing price below the balance here on the 5-minute chart, which is, of course, also significant. So just to explain briefly again, here's what happened. Down here, we had an air pocket in the order book. As you can see, there was also very little trading happening here. This was where the bell of trading volume was, which is why the stop loss was set above the bell. And down here, there simply weren't any follow-up sell orders. That was the reason why I took a take profit there at first, just to avoid any further risks. However, if it does drop down here and briefly generates liquidity, then we'll be down here immediately, and then I'll decide how to handle the remaining position. So now things are getting really exciting. Especially now it's getting really interesting to see whether the market above today's VPOC, where the trading volume has thinned out up here, will also start to flatten out again. In the end, it's nothing more than a balancing act at a very high level, and that's exactly what's crucial now, what the market wants to offer us at this point. And as I said, the market is about to open, and then most likely liquidity will be pushed downward at first. I'm pretty sure about that. Of course, that's a different kind of risk, and you need an incredible amount of experience to trade something like this. You can't do it with just a candlestick or something like that. You need many, many different factors that all have to fit together. It's always nice to see that too. Now, people who are looking at the pre-market and see, oh, we've made good profits, are taking their gains. You can also see this in gold right now, as I mentioned earlier. The probability is simply there now that the market says, yeah, that's great, and now we're back at this step here at 460. This is going to get very interesting now because the market has slowed down here again, and when it slows down, that basically just means that nothing is happening for the time being. Now, what's crucial is where liquidity is being pushed in, and we can also see that in the order book, it's incredibly thin. So now we've got it up there. I'm going to take a quick look at what's happening at 57, and then I'll make my decision accordingly. Exactly, I'm taking out another risk. So what I see now is that the market isn't generating any liquidity here at all, which means the probability of a pullback is high. And that's why I'm about to close my position with a stop loss as soon as we move back above here. Or if it breaks through, then I'm happy. You can see it here at this low volume node, and I see that we're fighting it here. And now it's over. We're out. That's it from my side. Thank you for watching.